It's important to note that market structures are the coordinated movements of candlesticks on the chart. When a novice goes onto the charts and the novice sees all these candlesticks, the novice thinks that they are all random movements. However, we as professionals know that all these movements are actually not random and they are moving in likewise patterns known as market structures. Okay, and for us as price action traders, it's important for us to understand market structures to be able to be profitable in the market. Okay, because market structures are also regarded as the backbone of the forex market. You have to be able to understand market structures for you to be able to interpret the structures correctly. Okay, so that is why we are taking this teaching today. Okay, so before we go ahead, we are going to talk about the two types of market structures. Okay, first of all, it's important to note that we have the bullish structures, which we are all aware by now. We have the bullish structures and we have the bearish structures. Okay, so what are these bullish structures and what are these bearish structures, right? The bullish structures are made up of higher highs and higher low coordination. Let's go ahead and write that out. That these bullish structures are made up of higher highs and higher low coordinations. Okay, while the bearish structures are made up of lower highs and lower low coordination. Okay, so in summary, right, or we'll say in a layman term, a bullish structure shows us what? An uptrend, while a bearish structure shows us a downtrend. Okay, a bullish structure allows us to know that price is progressively moving on higher highs and higher lows, which indicates that the market is trending upwards, while a bearish structure shows us that the market is moving what? Downward, in a downward trend, by what? By exposing itself in coordinations of lower highs and lower lows. Okay, so we as professionals, our job is now to interpret these market structures and know if we are going to pick a buy trade if we see price on bullish structures, or pick a sell trade if we see prices on bearish structures. Okay, so market structures are very important, like we said, because what? Because with a proper understanding of market structures, you can be able to tell where the market is going, short term, long term, and even multiple years, into the market. Okay, so this is that about that. Okay, so what we are now going to go ahead to do is to draw out what these bullish structures are and to draw out what these bearish structures are. Okay, so on the left of my screen right here, I'm going to write that these are bullish structures. While on the right part of my screen, I'm going to write out that these are bearish structures. Okay, so yes, let's go ahead. Okay, so for bullish structures, like we said, a bullish structure entails clear coordinations of higher highs and higher lows. Okay, for example, if we make it push exhaustion this way, then this is push and exhaustion, and this is push and exhaustion, and this is push. Obviously, we know that what the market moves in wave patterns. Okay, whatever chart, whatever asset it is, it moves in wave patterns. This means that what the market does not move like this. Instead, it moves like this or like this. Okay, this is what is known as wave patterns. That is what after every push phase, there must be an exhaustion phase. The exhaustion phase is the rest phase, right? So after every push, there must be an exhaustion. The exhaustion is the rest phase. Okay, so on the left side, like we said, these are the bullish structures, and on the right side, these are the bearish structures. Okay, so we said a bullish structure entails what? Clear coordinations of higher highs and higher lows. Okay, so from the lowest point right here, this will be known as L, which is known as what? As a low. Now, this one right here is known as an higher low. This is because what? It is higher than the previous low. Then this one right here is also known as an higher low because what? It is higher than the previous low. How about this right here? It's also what? An higher low because it's higher than the previous low. Okay, so the first movement right here will be known as what? H, which is what? An I. How about this one? This is known as an higher I because it's higher than the previous I. This is also known as an higher I because it's higher than the previous I. And the next one right here is also known as what? As an higher high because it is higher than the previous high. Okay, so these are clear coordinations of higher highs and higher lows. Okay, so beyond that, how about here? What are we seeing right here? This one right here can be regarded as, let's make a pinpoint right here, as an high. Okay, how about here? This one, we can write this as LH. LH means what? Lower high. Then this one right here is another lower high. Then this one right here is another lower high. Okay, so that makes, you know, the bearish structure. How about this point right here? This is regarded as a low. Okay, then this is regarded as a lower low because the lower is lower than the previous low. This is also regarded as a lower low because the low is lower than the previous low, and this right here is also regarded as the lower low. Okay, so a coordination of this is what makes up a bearish structure, and on the left side is what makes up a bullish structure. Okay, so this is a clear definition of what market structures are all about. Okay, so beyond this, what are we going to talk about? We are going to talk about the rules of trading these market structures, okay? Or even beyond talking about the rules of trading the market structures, we are going to talk about how we see what a break of structure, okay? Because it's important to note that that with the proper understanding of these structures, you also have to be able to understand when a bullish structure wants to become a bearish structure, and when a bearish structure also wants to become a bullish structure, which will be known as a break of structure. Okay, so now let's go on to a plain chart in order to break that out. Okay, so for example, right here we are seeing what? Clear bullish coordinations. These are clear bullish coordinations, right? Okay, so now for a bullish trend to fail, that would mean that there have to be a break of structure, which means that that the last higher low has to have been violated. This is the last higher low right here. There, it has to have been violated for us to know that yes, the bullish structure has been failed and the bears are now in charge of prices. In this case, we can now say that this is an higher low right here, and this level right here is now a lower low. Okay, so prices is no more a bullish structure. Instead, price is now a bearish structure. Okay, and for us as price action traders, this now offers us a trade entry opportunity at the break of structure, because as price action traders, our job is to what? Our job is to see where a break of structure has occurred and place our entry opportunity. Okay, so that is our job as price action traders. Okay, so in this case, like we said right here, with this explanation right here, we would say that this is what? Bullish to bearish structure. Okay, prices was initially bullish, but because of the break of structure, price is now bearish. We can now place our sell entry opportunity and, you know, in fact, place our stop loss at the high and ride the bullish trend. Okay, how about the other way, the bearish to bullish structure? Okay, if we see prices make clear coordinations like this, and we now see prices break structure like this, it's now going to be a situation of, oh, prices was originally on bearish structure, now prices now on bullish structure. Here, this is LH, this is the lower high, and here we can now see prices makes an higher high. So this higher high that prices now makes now confirms that price is no more a bearish trend, and instead price is now a bullish trend. So this would now be regarded as bearish to bullish structure. Okay, so it's very important that we understand where the break of structure is happening, because as price action traders, break of structure gives us our entry. For example, we can be able to place a buy entry right here, place our stop loss at the low right here, and ride the trade to whatever our take profit is. Okay, so it's important for us to understand that these are the only criteria where a break of structure happens. Okay, there is no other thing that signifies a break of structure. I've seen lots of funny things from traders that, oh, traders are like, oh, this is a break of structure. Those things are completely not true. These are the only things that signify a break of structure. Okay, on the bullish side, there must be a break of the last higher low, and on the bearish side, there must be a close above the last lower high, and this is what indicates a break of structure. Okay, so now that a break of structure has been defined, I'm also going to go further to define what will now be known as structure circles. Okay, so let's go ahead and write it out. Structure circles. Okay, what are these structure circles and why are these structure circles so important to us when it comes to trading? Okay, this is because structure circles are a unique or likewise movement of structures. Okay, structure circles can also be known as fractals. For those that have been following my teaching for years, you know that we talk about fractals a lot. Okay, so structure circles is what are coordinated and likewise movement of structures. Okay, but structure circles and the knowledge of it is very important for us because it allows us to understand prices even much more better. For example, if we see prices make movements like this, push exhaustion, push exhaustion, these are likewise structural movements, right, of the same structural circle. And we now see prices make small structural circles here. Okay, it's important to note that structure circles, okay, and fractals can be measured by the length of the exhaustion. Remember we said after every push there must be an exhaustion. After every push there must be an exhaustion. After every push there must be an exhaustion, as this is what this is the movement of prices on the chart. Okay, so in this case now, we saw the big movements, and right here we now saw small structure circles here. If there is a break of structure here, okay, and prices, for example, prices gets to a support level right here. Okay, let's say prices gets to a support level right here, and the support level now triggered the break of structure. It's important to note that even though but the bulls are in the direction of trend. That is, all these sales were only a retracement, and the bulls are in the direction of trend. But because what? But because the break of structure was of only small structure circles and not of the entire structure circle, then it's important that we trade at maximum to this level. This is the maximum level where you can trade. This is because what? A break of a small structure circle does not affect the big structure circle. So this is the maximum level you can take profit. In fact, this level right here will be known as what? TP2. Okay, now where is your safest exit of prices? Your safest exit would be somewhere around here, which will be at the 61.8, which would now be what? TP1. Okay, why is this? Okay, remember that the structure circle that was broken is of a very small structure circle. You can see the length of this exhaustion. They have a very small structure circle. So there's a high probability that that prices, even though it's in the direction of trend, that price might only be going for a retracement to continue the sell. Okay, so it's very, very possible that even though we are trading in direction of trend, so far we are not entering the trade on the break of the entire structure circle. We should watch out for 61.8 because 61.8 can actually send prices back. Okay, so if at 61.8 we've taken our profit and we're breaking even, that means that what? That means we've taken our profit, we have some money secured already, and we've broken even prices, which means that what we've rendered the trade risk-free. Then we can now wait to see if price will get to TP2. But if price decides not to get to TP2 and end the opportunity at TP1, that is 100% fine. We've taken half profit and we've broken even, and if prices comes back to hit our break even, that is fine. We've already had some money secured. Okay, so these are the rules of structure circles. A break of a small structure circle does not affect the big structure circle. Okay, so that's what I'm saying, that right here, because there's a break of a small structure circle, be wary of 61.8. Okay, it's only a small structure circle. Price can eventually form a large lower high here and go and continue the lower low. Okay, this is because what, like we said, a break of a small structure circle does not affect the big structure circle. So this is TP1 while this is TP2. If you want to go beyond the 61.8, and for the 61.8, where would you use your Fibonacci from? You use your Fibonacci from the high right here to the low right here within the structure circle that was broken. Okay, we can see the break of structure here. This is where the break of structure happened. Then use your Fibonacci at the highest point of the broken structure circle to the lowest point of the broken structure circle. 61 point is your TP1, then your TP2 is at the highest point of the broken structure circle. Okay, so the same thing right here is what we are going to explain right here. Let me take all this off, or either or. Let's just go ahead. Okay, for example, we see prices make big structure circles like this. Then we see prices make small structure circles like this. Okay, if prices eventually goes and breaks the small structure circle, we see a break of structure. This means that what? This means that the highest level you can sell to is this level right here. because what a break of a small structure circle does not affect the big structure circle. So you cannot trade. This is your tradable area, okay? Tradable zone. These are your tradable area, okay? That is your tradable area is from here, the lowest point right here, to the highest point right here. These are your tradable area. You have no business beyond the zone, okay? So where is your TP1? Your TP1, you bring out your Fibonacci and stretch your Fibonacci from the low right here to the high right here, because prices might actually just be coming to 61.8 in order to grab a support and take off to the top. It will now rhyme with what? Rhyme with the entire structures. Okay, so it's something that prices does very well. It will just come to 61.8, which would be TP1, and what? And just grab a support and take off to the top. In that case, it will now rhyme with the entire structures. Okay, so that's why it's important that what? That at maximum, take profits, take half profits and break even when prices get to 61.8. However, you can also wait to see if prices get to the lowest point right here, which is what? Which is TP2. That is the lowest point of the broken structure circle. Okay, so this is very important. Okay, so another rule of structure circle, we've talked about the fact that what? A break of a small structure circle does not affect the big structure circle. That's what I showed you guys on the bearish side and now on the bullish side. Okay, how about a break of a small structure circle? For example, we see price start on a break of a small structure circles. Then we now see price establish a big structure circle, right? Or a big structure. Then we now see a break of structure. Okay, so now with this break of structure, what are we going to do? When you place your sell, right, you can be able to sell to the lowest point right here. You can gladly take profit at this point right here, because what? The break of structure has affected the entire, you can see that what? A break of a big structure circle, right, affects the small structures. You can see that this is a big structure right here. If you see the length of this exhaustion, it's a big structure. Okay, so a break of this big structure has affected all the small structures below. So that is why you can now be able to take profits at what? At this lowest point right here. Okay, so that is what this is about. However, you can also be wary of the 61.8 if what? If the sell is only but a retracement. Okay, on lots of my videos, I've taught you guys how to be able to figure out if what? If a market is on a retracement or if a market is on the direction of trend. Okay, so the same thing right here is also the same thing for the bearish structure, right? If we see prices make movements like this, right, and we see what? A break of structure, we can see that what? A break of a big structure affects all of the other small structures behind it. So you can decide to buy to the highest point at this level. So far, the opportunity is in the direction of trend. Like I said, if the opportunity is a retracement, you can still be wary of 61.8 if the opportunity is a retracement. Okay, so in summary, it says that what? That a break of a big structure circle affects all of the small structure circles behind it. However, a break of a small structure circle does not affect the big structure circle. Okay, so just to reiterate again, we said structure circles are what? Are likewise movements of structures on the chart. Okay, so these are very important, and this is a very important knowledge that we should take into mastery, on our technical analysis. Okay, so beyond this, let's go on to the real life chart in order for us to practice every single thing I just talked about right now. Okay, so we are going to be taking gold for our example in today's teaching. Okay, so as usual, every single one of our pair, no matter what asset it is, we start from the monthly time frame. Okay, why do we start from the monthly time frame? This is because the monthly time frame, as we know, is like the highest level of the penthouse floor that allows us to see the entire city, that allows us to know overall what price is doing, and we can now be able to take that information to small time frames in order for us to pick a real-time trade entry opportunity. Okay, so what is the first thing we do when we come onto the chart? The first thing we do is to identify the real-time zone where price is at. Okay, and this is done on the monthly time frame. We've seen the real-time zone where price is at. As soon as that is done, what is the next thing? The next thing is to what? Is to read the entire structures that took prices to that point. Okay, so we are going to read the structures that can be contained on our screen. Okay, so from here, which is about 2007, we can see prices start on small structures here, push, exhaustion, then price made push, made exhaustion. So price started with small structure circles, then it made a big structure circle. Then price started another wave of structure circle again, which are small structure circles. It made push, exhaustion, then eventually went to establish a big structure circle here, push, exhaustion. Then it now started another wave of structure circle again, which is what? A small structure circle, push, exhaustion. Then all of this market now made the push. One thing that is clear, right, on gold, on the monthly time frame, is that market is clearly bullish. Without any iota of doubt, we can see the market is clearly bullish, which means that what? If we go onto on our small time frames to pick a real-time trade entry opportunity, it means if we are buying the direction of the trend. We are buying, with the overall flow of the market, while if we are selling a retracement. That is, we are selling against the overall flow of the market. Okay, so now that this is done, what are we going to do? We have been able to read the entire structures, and what are we going to do? We are now going to look for a trade entry opportunity by what? By taking what will now be known as a range of focus into what? Into the weekly time frame. Okay, so how do we get our range of focus? We take the last higher low, which we can see right here, and take the highest point of the chart, which we can see right here, and take this zone towards to the weekly time frame, as this zone will now be known as our range of focus. Okay, and our job is to look for a trade entry opportunity within the zone that is now known as our range of focus. Okay, so we are going to label all these levels. Okay, so here will now be known as a monthly HL. HL will stand for higher low. We always take the monthly higher low, and we take the monthly resistance for our range of focus. So this is monthly resistance. Okay, and this window will now be what? Our range of focus. So we'll take that window to the weekly time frame in order to expatiate on this window that we said is now what? Our range of focus. So within this window that is now our range of focus, what are we going to do? From here, we saw prices make push to this level. We saw prices made an exhaustion, small structure circle, another small structure circle again, push, exhaustion, then price made another small and likewise structure circle again. Okay, so this now becomes what? The last higher low within the confinements of this particular structure circle, which means that what the structure circles ahead of it are smaller structure circles. Okay, so right here would now be what? Weekly HL. This is the weekly higher low level. So we'll now take this window right here, the monthly resistance, and this weekly higher low level as what? As our range of focus again, to look for a trade entry opportunity within this particular window. Okay, so this is the monthly resistance, this is the weekly higher low level right here, and we are here to look for a trade entry opportunity within this window, which is now what? Our structure circle. So you can see how we brought from the weekly, that's how we take it to the you can see how we brought from the monthly, that's how we take it to the weekly, to the daily, and that's how we'll keep bracketing prices into range of focus until we see a real-time trade entry opportunity. So from here, we can see prices made a big structure circle here. Prices came, made push and exhaustion. Then after this, price started small structure circles, only to come back and establish what? A big structure circle again. So if you want, you can identify all of these small structure circles if you want, but either or, I've gotten my information already, which is what? I've already seen what? The last higher low right here. So this level right here will now be known as what? This is the daily time frame, right? As a daily HL. This is the daily higher low level. So we'll now take this monthly resistance and this daily HL, and take this window as what? As our range of focus. Remember, we'll keep bracketing prices into range of focus until what? We see a real-time trade entry opportunity. Okay, so now within this window right here, which is our range of focus, we'll now deal with the structure circles within this window. Okay, so now we'll now take it from here. From here, we saw price make push and exhaustion here. We now saw price make push and exhaustion here again. Okay, one thing that is clear is that what? Is that this last higher low here has not been violated. Okay, this last higher low is still holding within this particular structure circle. The last higher low is still holding and has not been violated, which means any trade I'm going to look for is going to be what? It's going to be from this monthly resistance level here to this low right here, which will now be known as what? As the 4 hours HL higher low. Okay, everyone knows that what? That the 1 hour is the lowest time frame that we'll go to pick our real-time trade entry opportunity. Okay, this is because the 1 hour time frame shows us what? It shows us clearer structures. Okay, and the structures on the 1 hour time frame are more matured, okay, in comparison to the structures on the 5 minutes, 15 minutes and stuff. Any structure that has been found on the 1 hour time frame are more matured structures. Okay, so what are we going to do? We're going to take this monthly resistance and this 4 hour higher low and what? And treat this window right here as our range of focus. Remember that if we are selling, it is only but a retracement. Okay, so now within this window, what are we saying? We are seeing price start from here. Okay, let's make it pinpoints. We saw prices start from here. All of these ones, price made push and exhaustion here. Then price made push to this level. It came for an exhaustion. Then at this level, prices made a push. Okay, so when prices made a push, then what did prices do? Prices now came down and prices broke structure. The last higher low was broken. Okay, this at that point was the last higher low level right here that was broken. Okay, let's take this drawing out again. You can see this last higher low. It was the one that got broken. Okay, so when prices got broken, what is the next thing? The next thing is what? Within the structure circles, there are going to be two take profit levels. Number one, it is a retracement. So this means that what? This means that the maximum that we can sell to is what? Is to the 61.8. That is the maximum we can sell to. Let's use the Fibonacci properly from the low to the high. The maximum, if we were to pick this trade, this level right here, written 61.8, is our take profit, which means that what? Which means that we would not have seen a trade entry opportunity, because you can see that the break of structure happened around the 61.8. It means that there was no trade entry opportunity. Okay, so this means that our only opportunity would have been what? Would have been waiting for prices to give us a buy trade entry opportunity. Okay, it's also important for us to note again that what? That 61.8 is a zone and not a pinpoint level. So you can see prices trading below 61.8 sometimes, but eventually prices, so far the movement is a retracement. For example, this sell movement is a retracement. It is eventually going to correct back into 61.8 and push up in the direction of trend. Okay, so sometimes you might see that, oh, price is trading below 61.8. It's not a big deal at all. 61 should be treated as a zone and not a pinpoint level. So what? So this means that sometimes price can trade below 61.8 only to correct back into the 61.8. So that should be expected from time to time with prices. However, our safest exit, if we are in a trade entry opportunity and the opportunity is a retracement, like I can say this sell is a retracement, our own safest exit is at the pinpoint 61.8, because I cannot tell you if price will trade below 61.8 or not. Okay, so since I cannot tell you, that means that what? That means that our safest exit is what? Is at the pinpoint 61.8. However, if prices chooses to trade below 61.8, that is also fine. At any point around here, prices grabs the bullish move, I'm going to be waiting, in order for us to buy in the direction of trend. Okay, so now I'm just going to identify the lowest point that is currently rejecting prices right now, and I'm going to write that this level is what? Is a 61.8 zone. Yes, you will say it's trading below 61.8, yes, but 61.8 is a zone and not a pinpoint level. So it will now be regarded as what? 61.8 zone PRA. Okay, so let's take this off a bit. There's a 4 hour level. So this is a 61.8 zone PRA, and this level can actually reject prices and send prices back in the direction of trend. So now we'll take to the 1 hour time frame in order for us to read the entire structures that brought prices down from this monthly resistance to the 61.8 zone PRA. Okay, so what are these structures that brought prices down? Okay, and what are the entire structure circles, right? So from here, we saw price start a wave of small structure circles here. Push, exhaustion here, then price started a big one right here, push, exhaustion, then prices made the biggest one right here, push, exhaustion. Okay, so after prices completed that, what did prices do? Price started a new wave of structure circles again. Like I said, structure circles are measured by what? By the length of the exhaustion. Okay, so you can see that this length of this exhaustion is shorter than this particular one. So this is a new wave of structure circle again. Then after that, what the prices do? Started another new wave of structure circle again by making the smallest structures here. This is now push, exhaustion, push. Then this is now push to what? Push to the 61.8 zone. This level here is not yet a lower high because price has not created a lower low. Lower highs are only established by what? By the presence of a lower low. Which means that what? Which means that within the entirety of these structures, there are different structure circles here, which is what? One, I'll make a pinpoint. This is what? This is one structure circle here. Then this last lower high here again, this is what? Another structure circle here at this point. Okay, So right now, the current structure circle, right, is from here. So I'll now write that this level here is what? Is CSC. CSC means current structure circle. Okay, so I'll now take it from here to this 61.8 zone. This window will now be what? The window of my current structure circle. That is what? From here to here are my current structure circle. So within my current structure circle, right, where's the last lower high that I'll be waiting for a break of structure? This is the last lower high that I'll be waiting for what? For a break of structure. Okay, so what am I talking about? Okay, if I see prices make movements like this, push and exhaustion, right? Push to this level and exhaustion, right? Then prices comes to the 61.8 zone PRA. Then maybe prices comes, breaks this structure here. What will I wait for? I'll wait for what? For a discount in order for us to buy in the direction of trend. Okay, discounts mean that what prices are making a retracement to the 61.8 in order, before pushing ahead to take profits. So if prices makes a move like this will be the, and I see a break of structure, I'll wait for a discount, buy in the direction of trend. Okay, fantastic trade entry opportunity. If prices also decides to eventually make this as a lower high, then it's just going to be a situation that prices would have made a movement like this of push, exhaustion, push, exhaustion, push to this level, exhaustion. Price would have made another push because lower highs are only established by the presence of a lower low. Then wait for a break of structure, discount, then buy in the direction of trend within this current CSC. However, remember I just taught you guys about structure circles, right? So I said, because what? Because we are entering on small structure circles, right? Our safest exits might just be what? Might just be the 61.8 of this particular structure circle. That is, I'll bring up my Fibonacci from here to here. My safest exit might just be at the 61.8. However, if I want to ride to this top, what am I going to do? I'm going to what? I'm going to break even when prices get to 61.8. Remember, we're entering at the discount, so our entry is going to be somewhere around here at the discount. So if prices pushes from here and gets to 61.8, I can break even and even take half profit, okay, until prices complete this movement at this level. If from here prices decides that, oh, it doesn't want to go ahead again and it wants to come down, then that means that what? At least have some money in the bag. Why is that? This is because what? We are entering the trade on small structure circles, okay? For example, if we were entering the trade on the break of the entire structure circle that brought prices down to the 61.8 zone, okay, what are these entire structure circles? Let's take all of this off and let's talk about the break of the entire structure circle, okay? So all of these ones, everything push, exhaustion. Within the eye of this structure circle, this is the last lower eye. All of these are small structures, okay? So within the eye of this is the last lower eye that push towards the 61.8 zone PRA here. Then if we now see a break of structure and we see a discount, here now we've seen the break of the entire structure circle that brought prices down to the 61.8 zone. So in this case, 61.8 will not even be a conversation. Just buy directly to the highest point of the broken structure circle, okay? You don't even need to identify 61.8 as a potential order. Price is going to cross through 61.8 flawlessly, okay? But because what? But because we are entering on very small structure circles, right? Number one, we said that what? Within this movement, the entire structure that brought prices down to the 61.8 zone. This is what? Push, exhaustion. This is one structure circle. Then we now saw again, we saw push to this level again. We saw exhaustion. This is another structure circle. We are now entering on the smallest of the structure circles. For example, let's say prices makes a move like this, push, exhaustion, price eventually now makes push to this level, exhaustion, push to this level, price now breaks structure. We are entering on the third wave of structure circle that brought price down to the 61.8 zone, which means that what? That's our best level for take profits. Remember that what? Our best variation of entry, as we all know, is what? Wait for prices to give that retracement, okay? Then what do? Just buy, to the highest point of the structure circle, which is here. However, 61 point is your safest exit. So if you want to exit at 61.8, excellent, run with your bag, run with your bag. But if you want to buy to the highest level of this structure circle, which is here, this is the highest level of this particular structure circle. If you want to buy here, make sure that you've broken even the current opportunity and you've taken half profits. If you don't want to take half profits, that is fine. Just break even. You understand? Because what you are entering on on a very small wave of structure circle. You are not entering the trade on the break of the entire structure circle that brought prices down. So this means that 61.8 prices can now from here just come back here. So all of this will just be seen as a lower high in the eye of this big structure circle. So it will just be a situation. Let me take this off. It will just be a situation where prices only made movements like this, where prices just made movements like push, exhaustion, all of this, push, exhaustion, only for prices to continue the push. Okay, so that's why we have to be very smart. We have to understand structures, and we have to understand structure circles in its entirety.